Today we're going to speak about the lending programs from all the major banks, the qualifying factors needed to get you approved, and the features and benefits of each program and how it can help you achieve your target. Now, a lot of times when I'm speaking to a client and I ask them for the use of funds, let's just for an example, they ask me for $250,000. I said, well, what's the money going to be used for? And he said, well, $100,000 is for equipment, $100,000 is for working capital, and $50,000 is for accounts receivables. Well, equipment and accounts receivables is collateralized. This is a much different criteria than versus getting somebody cash. So I wanted to dive a little bit deeper into the different products and how we can structure a loan request to be able to help achieve the client's outcome. So a lot of times we found a lot of banks have these application-only streamlined, lines of credits and term loans in order to help get to that target a lot faster. Requests anywhere from $50,000 to $150,000, equipment to $250,000. A lot of times we just need an application, we submit it through, and they base the majority of the qualification factors on your personal and your business credit. And of course the revenue is definitely a factor in order to streamline the process. But the average rates that we've found is anywhere from 5 to 9%, from 3 to 5 year terms. And it can take us anywhere from 1 to 3 weeks from submission to close once we are ready and they pass compliance. So some of the factors that we look for in personal credit is anywhere from 660 to 680 FICO. However, that's the minimum that's needed. But if we're able to get somebody from a 700 or a 740, the process will go through a lot quicker and a lot easier. At the same point, the interest rates that is offered will be a lot lower. So it's in your best benefit to get your scores as high as possible before we go and submit. Now, some of the things that the minimum requirements that we look for is, 4 trade lines, typically around $5,000 each at minimum for like revolving, autos and installments. But for an installment side, we like to see around $15,000 to $20,000. Revolving was around $5,000. But in total, it's great to have at least $40,000 in total accounts in total trades. Why? Because if you're going to request a $50,000 to $150,000 loan request, the banks want to see that you've had that experience of paying back a large amount of debt in a timely manner. So the years that they want to see, the minimum years that they want to see here is anywhere from about 2 years in history. Okay, credit utilization from 30 to 50%. Of course, we like to see lower the better, but if it's at 30% is usually the benchmark at maximum, but it depends on the request and the other compensating factors. If they have really strong revenue or strong business credit, sometimes that can compensate and push to approval before we submit or after we submit. We don't like to see any derogatories, no delays, collections, public records, etc. That does scare a bank for your payment history, which is one of the main factors for your credit score being low. Of course, there are exceptions to the rule. So if you've had a blemish, you're on vacation, or something happened, your bookkeeper forgot to make a payment, there is those exceptions, and of course the banker that you utilize, and of course each bank has different thresholds for personal credit. Some are very, very strict, some are more common sense. Depends on the lending institution that you're working with. Okay, and low credit for inquiries. So we typically like to see anywhere from no more than 2 or 3 recent inquiries. If you have excessive amounts, 6 or 7, 8, 10, it can actually scare a bank from wanting to lend you because now you're overextending yourself or you're shopping too much, and it could actually drop your scores and be a red flag for banks. Next thing is your business credit. Just like personal credit, it is very essential that you build your business credit. So if you have a minimum of around $25,000 in different trade lines being seasoned on your account, it's going to help with the approval process. Of course, just like personal credit, no major delinquencies. If there is any, of course, we have to have a good explanation for what happened, be able to explain to the underwriter so they don't deny you. No existing UCCs. Now, of course, there's exceptions to the rule. If you have equipment that's collateralized or a different loan that is collateralized by real estate or inventory or some sort, that does produce a lower risk factor for banks. But if the rule of thumb is that they don't like to be in second position, because if in the event that you default, you go bankrupt, they don't want to be in second or third or fourth in line in order to get their repayment of the debt that they lent you. Now, UCCs 1s are what I call the deadliest of all UCCs. That means that the lender is blanketing all assets, and in order for us to proceed or get you qualified for the next tier, you would have to either consolidate or pay that off before moving forward. Now, for this program, banks like to see a minimum of 2 years in history. They want to see that track record, that you've had that growth and you've been able to sustain the loan amounts that you're going to request. For equipments, there is a lot of banks and lenders out there that will do startups. Typically, a higher interest rate. It's not going to be the same as if you were 2 years in business, but there are a lot of lenders out there that will accept startups. Now, financials, it's loan amounts based upon 10 to 15% of your gross revenue. So if you're requesting $150,000 and last year you made $200,000, well, your calculation of 10% is a loan amount of $20,000. The bank's not going to want to over leverage you because you don't have that establishment of growing your revenue at a higher element. So that's very important to understand if you go through and you qualify for this type of program, that your revenue should sustain the request for the loan amount.